Hi everyone, welcome back. We are on chapter number whatever, but the chapter name is trading losses for the companies. All right. Again, this lecture is exactly the same for F6 and P6 purposes, and I've made just one lecture. For P6 students, you will have to see this lecture. You will have to read this chapter from your P6 notes after finishing this lecture. All right. So simple for trading losses as well. Now, as you can see on your screen, so example is given for trading losses carried forward. So we can carry forward our trading loss as long as we want until our loss is fully relieved. So it says if our current tax year is 2017 and we had a loss, we can carry it forward to set off against our trading profit in the future as long as we want until the loss is fully relieved. Just beneath that it says trading losses not relieved in the current year can be carried forward to set off against the first available trading profit of the future years. Trading losses can be carried forward for as many years until the loss is relieved. Qualifying charitable donations not relieved in the current year will be wasted. So qualifying charitable donations is like personal allowance of capital gains tax, if you remember, like annual exemptions. So it will be wasted if it is not relieved. Sorry, I was on the wrong page. Right, on the next page if you move, it is a trading loss against the total income. So previous one was trading loss against trading profit, so we can carry forward in the future year as long as we want, but how we can only set off against the trading profit of the future years. All right, now this one is, which we are going to look now, is the trading loss against total income. We can set off against total income of current year and previous year as well. All right, now in the example, as you can see, two examples are given. So it is not 20,006 basically, sorry, it's a typo, it's 2006 the previous year, and the current year is 2007. All right, now we can, if we had a loss in 2007 year, so we can set off our loss in the current period. So we can set off against total income of the current period, and if anything is left, we can carry it back in the previous year so that we can set off against previous year's total income as well, as you can see on your screen. Now in the notes it says trading losses can be set off against total income before gift aid donations of the current year. So before gift aid donations, so the losses will be set off, but it will be before gift aid donations, which means that gift aid donations will be wasted. All right. Likewise, in the previous year as well, when we are carrying it back to the previous year, in that case as well, it will be before gift aid donations. All right. So we can carry it back in the previous 12 months against total income, but it will be before gift aid donations. So gift aid donations will be wasted. All right. Now, like it says in the notes as well. So if the company wishes, it can further carry back its trading losses, if any, against total income of the previous 12 months. Any trading loss not relieved in the current year and the previous year can be carried forward against trading profit of the future years. All right, and the claim for the loss should be made within 2 years from the end of the accounting period of loss. So what does it mean? That we can use against current year's trading profit, we can use against current year's total income, and we can carry back in the previous year's total income as well. Now, whatever is left even after setting off in the previous year, we can carry it forward in the future year to set off against future year's trading profits only, and we can carry it forward as long as we want until the full loss is fully relieved. So that is a good thing. Now, just beneath that, the last one is a terminal loss. Now, terminal loss is exactly like as we have seen in our individual cases. So the trader ceases, then the trading loss of the last 12 months of the trade can be carried back to set off against the total income of the previous 36 months on a LIFO basis. Qualifying donations not relieved in the current year will be wasted. Right, let's do a question of this. Question number, let me see on the piece of paper. It's question number 203 of the F6 exam kit. Question number 203 of F6 exam kit. Now, I've opened the question. It's question number 203, and we have to do the question number 204 as well, actually. So just read these two questions. Just pause the video, read these two questions, and try to solve these questions with the help of our notes, which we have just studied. So these are about companies' losses, and could you please tell me the answers of these two questions, 203 and 204, please. Just pause the video and do these examples. Do these questions, please. Right, I hope that you have already done it. Right, so if we read question number 203, it says Cook PLC prepares accounts to 31st of December each year. For the year ended 31st of December 2016, taxable total profits after deduction of £1,000 qualifying charitable donations was £25,000. Now it normally prepares this account to 31st of December each year. For the year ended 31st of December 2016, total taxable profits after deduction of £1,000 charitable donations is £25,000. So it is after deduction of the charitable donations. So before charitable donations it will be £26,000. After donations it is £25,000 because we have deducted, right? So trading profit is how much? £25,000 after the deduction of qualifying charitable donations. For the year ended 31st of December 2017, so which is the next year, the company made a adjusted trading loss of £40,000 and had other taxable income of £10,000 made no qualifying charitable donations. What is the maximum amount of loss of the accounting period 31st of December 2017 that company can claim to carry back to the accounting period ended 31st of December 2016? So basically it had profit in the previous it had profit in the current period. It had profit in the current period. Say for example 2016 it had a profit of £25,000 after deduction of the qualifying charitable donations. Now in the next year, I mean you can say the current year or whatever. So in the next year basically the profit, the loss was how much? Loss was £40,000. So the loss was £40,000, but there was other income as well. So what they can do is the company can do, so company can set off the trading loss of £40,000 against other income of the current period. So £40,000 will be set off against current period's total income first. So the loss is £40,000, but the income is only £10,000. So it can right, so £10,000 of the loss can be set off against this profit. So the remaining loss would be £30,000. Now this remaining £30,000 can be carried back in the previous year to set off against previous year's profit. Now previous year profit is £25,000. That is after donations. So we'll have to take before donations, and before donations it's going to be £26,000. So this £30,000 can be set off against £26,000 of the previous period, and the remaining one can be carried back in the future periods. All right. So that's how we do it. But in the previous period, how much can we set off? We can set off £26,000, not £25,000. All right. So please remember, we can set off the losses before deduction of the gifted donations. So gifted donations would be wasted. All right. So that was £26,000 is the answer to this this question. And the next question, if we read, I hope that you have already done it anyway. So Deal Limited has the following results for the 12 months 2017 and 9 months to 31st of December 2017 and 12 months to 31st of December 2018. So 31st of December 2018 it had a loss of £160,000 and a property business profit of £5,000. So what he can do is loss of the 2018, he can set off £5,000. He can set off £5,000 of the loss against the property profits anyway, right? So how much is the remaining? Remaining would be £160,000 was total. 5,000 is set off against the property profit of the current period. Remaining would be £155,000. Right? Now this £155,000 can be set off against the previous 12 months. Now this £155,000 can be set off against the previous 12 months. However, the previous accounting period is only 9 months long, so we will set off against them 9 months. So how much is the profit in the previous 9 months anyway? Previous 9 months it's £40,000 of the trading profit, and 15,500 is the property income. So this is basically 55,500, right? So remaining loss after setting off against current periods 5,000, remaining loss will be set off against the previous 9 months. So previous 9 months profit of 55,500 will also be set off against that loss, right? So whatever the remaining loss is, we still can carry back in the previous period. Now, however, we will only be limited to the 3 months because the previous accounting period is 12 months long. We can only carry it back to the previous 12 months. We've already used 9 months, so we'll take only 3 months from the last accounting period. So we'll only take 3 months out of the accounting period ending on 31st of March 2017. So the profit for the period 31st of March 2017 is £45,000 plus £18,000. So the profit is basically how much? 63,000 pounds. So the profit is 63,000 pounds for the period 31st of March 2017. We will take 63,000 pounds times 3 over 12, because we only need 3 months worth of profit to set off against that loss. We've already used 9 months anyway. We can only carry it back to the previous 12 months. All right, so that we can only carry it back to the previous 12 months. So that's how much we will set off. All right, so how much can we set off? In the current period, we will set off 5,000 pounds, so the remaining loss would be 155,000 pounds. Now that 155,000 pounds can be carried back to the previous 12 months. So the previous accounting period was only 9 months long, so we will set off against that 9 months. And the previous, before that, the one before that was 12 months long, but we will only take 3 months from that, because we have already used 9 months. All right, so that's how we will set off the loss in this question of 204. Right, so that's it for this video lecture as well. As you have seen, it was so small chapters because most of the stuff is already we have covered already in our income tax. So that's it for this video. I will see you in the next video lecture, and we will see more aspects of corporation tax.